more about the subject and the concept cost accounting. Let's commit efforts to accustom this newly ventured mode of teaching and learning resources. A very good luck. Module 1, Introduction. Cost is incurred when a resource is used for some purpose. In other words, a firm incurs a cost when it uses a resource for some purpose. Cost represents the resources that have been or must be sacrificed to attain a particular objective. The scope of cost accounting adds to preparation of budgets, determination of standard costs based on technical estimates, identifying variances, cost control, cost reduction, ascertainment of profitability, etc. Cost is not the responsibility of one department, rather skillful integration of management, processing and finance. Cost accounting aims to assist organizations in understanding their cost, productivity and efficiency in conducting business in order to improve operations. The main objectives include classification of cost, ascertainment of cost, ascertainment of profit, determination of selling price, basis of managerial decision making, facilitation of cost control and cost reduction, etc. The functions of cost accounting include to enable cost control for materials, labor, and other miscellaneous expenses, to help the management in the preparation of budgets and setting up budgetary controls, to ascertain the cost per unit of every product that the company manufactures. These are few of the functions of cost accounting. Now, let's compare financial accounting with cost accounting. The main purpose of financial accounting is to calculate the profit or loss of a business during a period and to provide an accurate picture of the financial position of the business as on a particular date, whereas cost accounting aims to help the management in fixing the price and controlling the cost. It also pinpoints any wastages, leakages, and defects during manufacturing and marketing process. Financial accounting deals with all commercial transactions and the maintenance of the books of accounts with a view to ascertain the profitability and financial status of the business. Financial accounting deals with historical data. Cost accounting deals with transactions relating to manufacturing and sale of products and services. It deals with only actual costs and figures. Cost accounting uses both historical and predetermined costs that includes standard costs, estimates, etc. Financial accounting is presented according to the concepts, principles, standards, and in compliance with various acts and statutes. It uses financial statements, journals, ledgers, and trial balances for presentation. On the other hand, cost accounting is presented as per acts and statutes, which is mandatory to certain organizations. It uses tools to help improve the efficiency of business operations. These include cost of sales, product margin, and selling price of the products. The users of the information provided by financial accounting are both internal and external users. It includes the owners and the investors, management, creditors and suppliers, lenders, government, customers, employees, and the general public. Financial accounting presents the business performance. Cost accounting is used by the management to improve business process efficiency, and therefore the internal stakeholders like management of the organization are its users. Cost accounting also benefits the creditors and investors as they feel secured if there is business prosperity. In case of financial accounting, financial statements are prepared at the end of the year. In other words, financial accounts provide financial information once a year. Cost accounting furnishes cost data at frequent intervals, that is daily, weekly, monthly, quarterly, half-yearly, or on annual basis. As per this standard, the classification of cost may be on the nature of expense or on the nature of traceability to a cost object, or by its function, or by nature of behavior, or by the nature of production or operation process. Items of cost differ on the basis of their nature. Costs shall be gathered together in their natural grouping, such as material, employee, and expense. The elements of cost can be classified in the following three categories, that is material, employees, and expense. Material costs are the cost of the material used for the purpose of production of a product or a service, example, raw material cost, packing material cost, etc. Employee cost, on the other hand, is the aggregate of considerations, including benefits paid or payable for the employees for rendering their service for the entity. It includes the employees who are temporary or part-time or contract. The considerations include wages, salaries, and other payments, including benefits. Expenses are the cost other than material cost and employee cost for the purpose of production of a product or a service. Example, cost of utilities, housekeeping charges, job processing cost, etc. Cost unit. It is a form of measurement of the volume of production of the product or a service. It is generally adopted on the basis of the convenience and the practice in the industry concerned. For example, while taking the measurement in units of numbers per 1,000 bricks, in case of weight, it can be considered as per ton of coal. In case of length, per meter of cloth, etc. In simple, it is a unit of the product or service or time in which cost can be ascertained. In case of types of cost unit, there are two types, single cost unit and composite cost unit. Single cost unit, as the name suggests, is simple as it considers only one aspect. For example, in case of quantity of goods, kilogram, ton, etc. On the other hand, a cost unit is said to be composite when two units are merged into one. For example, in goods transport industry, the composite cost unit is per ton kilometer. For hospitals, it is per bed per day. In case of passenger transport industry, it is per passenger kilometer. Cost center. It is a responsibility center for which costs are accumulated. The main objective of this center is to minimize cost. It can be a department or a team which represents a job activity, process, or machine whose costs are allocated equitably and practically for the purpose of costing. There are two types of cost centers, personal cost centers and impersonal cost centers. Personal cost center consists of a person or a group, whereas impersonal cost center consists of a location or an item of equipment or a group of this. For example, factory as a location, machine as an equipment form part of the impersonal cost center. Methods of costing is referred to the different process or procedures employed for the determination and presentation of cost. In other words, method to be used for the ascertainment of cost of production differ from industry to industry. It depends on the methods of measuring the departmental output and finished goods. There are two basic methods: specific order costing and operation costing. Costing method include job costing, batch costing, contract costing, process costing, operating costing, and multiple costing. In addition to the methods of costing, there are some techniques or types of costing also. Types or techniques of costing refer to the manner of ascertaining cost for cost control and decision-making purpose. They are the way in which cost information is presented to the management for cost control and decision-making. As a matter of fact, they are not independent method of cost finding, such as job or process costing, but are basically costing techniques which can be used as an advantage with any of the methods discussed earlier. Costing technique includes absorption costing, marginal costing, direct costing, uniform costing, historical costing, and standard costing. Marginal costing. It is a technique of costing in which allocation of expenditure to production is restricted to those expenses which arise as a result of production. Example: material, labor, direct expense, and variable overheads. Of all the available techniques of costing, marginal costing is the most suitable for making decisions like how much material to buy, the correct product mix, fixing the selling price, etc. Direct costing. It is the process of charging all direct costs, both variable and fixed costs, to products, services, jobs, etc. The indirect costs are charged against the profit of the period in which they arise. Absorption costing, also known as full costing. It is the process of charging all costs, both variable and fixed costs, to products, services, jobs, or processes. It is the traditional way of ascertaining cost. There is no distinction made between variable cost and fixed cost in this technique. Uniform costing. When several undertakings use the same costing methods, principles, and practice, it is called uniform costing. It is of great help in cost comparison. Budgetary control. A budget is used for controlling and coordination of business operations. A budget is a quantitative or financial statement prepared prior to the definite period in order to help achieve certain objectives of the firm. The budget can be in the form of quantitative and monetary statement. Budgetary control is a preparation of the budgets and analysis of the actual performance of the firm in comparison to the budgeting numbers. Historical costing. This technique records only the cost which has been incurred in the past. The technique is of little use in cost control. Since costs are ascertained after they have been incurred, it does not help in exercising control over cost. It helps in submitting tenders, preparing estimates, etc. Standard costing. Through standard costing, a comparison is made of the actual cost with a pre-arranged standard cost, and the cost, if any deviation, called variance, is analyzed by causes. If actual costs are greater than the standard costs, the variance is adverse. So, we analyze the reason for this adverse variance and try and solve the root causes. And if the standard costs are higher than the actual costs, the variance is favorable. Even favorable variances must be analyzed. This permits management to investigate the reason for the variance and to take suitable corrective action. Here we have discussed about the basics of costing, the cost accounting features, the objective of cost accounting, how cost accounting is different from financial accounting, what are the methods of costing, what are the techniques of costing, and Module 2, Materials, the basic element of cost, or one of the most significant element of cost. Here we will discuss about the material cost, the importance of material cost in cost accounting. Material is one of the important elements of cost of product or unit. A material can be anything, an unprocessed raw material or a finished product in its own right. Material control system consists of two levels: quantity controls and financial control. The basic objective of effective material control system is to enable management to place an order at the right time from the right resource and to the right quantity of the right quality at the right place. Purchase procedure. There are two modes of purchase procedure: centralized purchase and decentralized purchase. Centralized purchase means purchase of materials by one specialized department, whereas decentralized purchase means it is allowed according to the needs. The authority to make purchases lies with different individuals in different departments. Store control means the purchased materials by a concern may be classified as stocks, and these are kept in store and held until required or as directed. The functions of stock control includes to obtain the maximum stock turnover consisting of materials of sufficient stocks to meet all requirements. The delivery delays can be controlled. There should be a store space which can be functioned by the stock control. Moreover, the cost of storage, risk of loss due to fall in prices, deterioration can also be controlled. There are three types of stores: centralized stores, decentralized stores, and centralized stores with substores. Centralized stores receives the materials and issues them to all departments, divisions, and production flows of the company. Decentralized stores receives materials and issues them to only one department and not to the whole company. Centralized stores with substores is a mix of centralized and decentralized stores. Bin card is a card which is attached to each bin, rack, shelf, or other containers for stores. Store records are maintained in case of two aspects: issue of materials and store accounting. Issue of materials means materials are issued only on receipt of properly authorized withdrawal form. Store accounting is the acceptance of the materials in the stores are accounted and properly maintained. Perpetual inventory is another system of verification of materials. Under this system, the actual stock is taken continuously and is compared with the stock as shown by the material records. In case of large concerns, large number of items are kept in the stores. Therefore, it is practically impossible to concentrate on each and every item. In such situations, A/B analysis used with a view to exercise better control over materials. Under ABC analysis, all materials are classified into three categories: A, B, and C, according to their value. Category A includes high value materials, that is costlier materials. Category B includes medium or moderate value materials, that is less costly materials, and category C includes least costly materials or lower value materials. WIEGHTED analysis. This technique of material control is used for control of spare parts, oils, lubricants, and other like. WIEGHTED refers to vital, essential, and desirable. Vital materials are those which are very critical for production. If these are out of stock, it will lead to immediate production shortage and heavy production loss. Essential materials are those which are very important. Without these, production can be done only for a few hours or a day. If they are out of stock for a longer period, production will be in a halt. Desirable materials are those which are required for production, but factory can manage without them for some time, maybe a week or more. JIT inventory, or just-in-time inventory technique. It is a modern technique of inventory control. Just-in-time, or JIT, refers to producing only what is needed when it is needed in just the quantity needed. Stock levels. Stock level is a method for managing inventory. Inventory is a stock which the firm maintains to meet its future requirement for production and selling. The basic reason for holding inventory is to keep up the production activities unaltered. Stock levels are maintained for standardized materials which are regularly used in an organization. EOQ, or economic order quantity. While purchasing the materials, an important question arises as to what quantity should be purchased or ordered. The quantity of materials that is ordered should be neither too large nor too small. If it is large, the holding cost of inventory will be larger. If it is less, ordering cost will be larger. So the size of the order must be economic. This means that only optimum or most favorable quantity should be purchased at a time. The economic order quantity formula is as given. Q stands for economic order quantity in units, D stands for annual units, S stands for ordering cost per purchase order, and H stands for carrying cost per unit. There are several methods of pricing or valuing materials. While choosing a method, it should be seen that the method is simple, cost-effective, and realistic. There are two main categories for pricing of material issues. They are cost price method and market price method. In cost price method, we have FIFO, LIFO, average cost method, highest in first out method. Market price method include replacement price method, realizable value method, standard price method, current standard, basic standard price method, etc. First in first out method, or FIFO method. Under this method, materials received first are issued first. In other words, materials are issued from the first lot or first consignment and priced at actual cost. After completion of the first lot, the second lot is issued, and so on. LIFO method, or last in first out method. Under this method, it is just the reverse of FIFO method. Materials are received last, are issued first. Thus, materials are issued at the latest consignment prices and closing stock is valued at the oldest consignment prices. Simple average method. Average cost methods are based on the assumption that the materials purchased in different lots are stored together and an issue cannot be made from any specific lot. Therefore, materials are issued at the average cost price irrespective of the date and price of the purchase. The formula for rate of issue is total number of different rates divided by number of rates. Weighted average method. Under weighted average method, issue price is calculated by dividing the value of material in stock by the quantity of material in stock. Thus, this method takes into account both the quantity and price of materials in stock. In this module, we have discussed about the various methods for material issue, what are the store records to be kept, and what is the importance of material as an element of cost. I hope the concepts are clear. Thank you. Module 3, Labor and Overhead. Labor represents human effort engaged in the process of production. It is a physical or mental effort expended in manufacturing a product. In other words, the human effort required for the conversion of raw material into finished goods. On the other hand, Overhead refers to the total of indirect material, indirect labor, and indirect expense. In short, it is the total of all indirect costs. In this module, we will look into the details of labor cost and overhead cost. Keeping up labor cost helps to position direct labor cost amongst product, task, or physical care for ascertaining cost of production accurately. Moreover, it helps in the comparing amongst the yester labor cost in addition to the exchange purpose. Moreover, it helps to cut down labor turnover. The process of recording the time of arrival and departure is known as timekeeping. The main objective of this process is to facilitate preparation of payroll if wages are paid on time basis, to maintain discipline in attendance, to calculate overtime, and also it helps to control the labor cost. Time booking is a recording of the time spent by a worker on different jobs. The main purpose of time booking is to ensure that time paid for is fully utilized on production, to disclose the idle time or the wastage of time so as to control it, to compare the labor cost of different jobs, to control the labor cost as such, and to ascertain the levels of efficiency of workers. Idle time is a time paid for but not utilized in production. It is the difference between the hours paid and the hours worked. A part of idle time is unavoidable and is considered as a normal occurrence in the factory. Overtime is the amount of wages paid for working beyond normal hours as specified by the Factories Act or by mutual agreement between the union and the management. There is a practice to pay for more during the overtime work. There are two basic methods of labor remuneration: time rate and piece rate system of wage payment. Time rate system refers to where workers are paid according to the time for which they have worked. The formula is number of hours worked into rate per hour. Piece wage system refers to where the workers are paid in proportion to the work done by them. That is, the total earnings or the wages are calculated as units manufactured into rate per unit. Incentive scheme. The primary purpose of an incentive plan is to induce a worker to produce more to earn a higher wage. Because of greater number of units produced, it should also result in lower cost per unit for fixed factory cost and also for labor cost. Moreover, incentive scheme helps to provide an additional remuneration to the workers to their efforts and efficiency. Overhead refers to the cost which cannot be traced directly to any cost units or cost center. It is a total of indirect material cost, indirect labor cost, and indirect expense. Overheads are usually classified in terms of functions, that is factory overhead, administration overhead, selling overhead, and distribution overhead. Overhead allocation is a practice of distributing indirect cost to the revenue producing projects. Absorption of overheads means the distribution of overhead expenses allotted to a particular department or the units produced in that department. Overhead absorption is the accomplishment by overhead rates. Labor hour rates are used to determine both the price of the employee time charged for production and the cost of the employee time to the employer. Machine hour rate is the cost of running a machine per hour. It is used in those industries or departments where machinery is predominant and there is very little practical or no manual labor. To summarize, we have actually went into the details of labor cost and overhead cost. I hope the concepts are clear. Thank you. Methods of costing. In this module, we will look into the different categories of costing methods. Specific order costing is the basic costing method applicable where the work consists of separate contracts or jobs or batches, each of which is authorized by special order or contracts. Job costing, batch costing, and contract costing are included in this category. This method of costing is also known as job or terminal costing. Job costing is a form of specific order costing under which each job is treated as a cost unit and costs are accumulated and ascertained separately for each job. A job may consist of a product, batch of products, contract, a service, or any other specific order. The industries suitable for this method of costing include engineering industries, construction industries, shipbuilding industries, etc. The purpose of job costing is to determine the profit made on each job, as this will help for future planning. When the job is big and spread over a long period of time, then the method of contract costing is used. This is a form of specific order costing under which each contract is treated as cost unit and costs are accumulated and ascertained separately for each contract. This method is used by builders, civil engineering contractors, constructional and mechanical engineering firms, etc. In other words, the industries suitable for this method of costing include those industries engaged in construction, building roads, bridges, or other construction work, and even undertaking engineering products. Batch costing is an extension of job costing. This is a form of specific order costing under which each batch is treated as a cost unit and costs are accumulated and ascertained separately for each batch. Each batch consists of a number of like units. This method of costing is applied in those industries where the similar articles are produced in definite batches. For instance, industries like ready-made garments, toys, tire, pharmaceuticals, etc. The second basic method of costing is operation costing. Under this method, costs are accumulated for each operation and the cost per unit is ascertained at each stage of production by dividing the total cost of each operation by the normal output of that operation. Operation costing is used in the industries where the manufacturing process consists of a number of distinct operations. This method is also known as process costing or period costing. Under this method, all costs are accumulated for each stage of production, ascertained at each stage of production by dividing the total cost of each process. This method is applicable in those industries where manufacturing activity is carried on continuously by means of two or more processes. The output of one process becomes the input of the following process. For example, paper industry, chemical industry, textile industry, and sugar industry. This is a form of operation costing under which costs are accumulated and analyzed and cost per unit is ascertained by dividing the total cost by the number of units produced. Moreover, under this method, production is uniform and continuous and units of output are identical. This method is suitable for cement industry, steel industry, flour mills, brick making, etc. Unit costing method is also known as single costing or output costing. This method is suitable for industries which render service as distinct from those which manufacture goods. The cost of providing service are ascertained in case of those undertakings which provide services and are not engaged in the manufacture of tangible products. For example, industries like road transport, railways, hospitals, airlines, cinemas, etc. There is usually a compound unit in such undertaking. Example, ton kilometer for transport undertaking, kilowatt hour for power supply, and patient days for hospitals. This method is also known as service costing. This method of costing is an application of two or more methods of costing in respect of the same product. It is used in industries where a number of components are separately produced and assembled to a final product. This method is suitable for industries manufacturing bicycle, motorcycles, television, air conditioners, etc. This method of costing is also known as composite costing. In this module, we have discussed in detail the methods of costing. I hope the concepts are clear. Thank you. Module 5, Cost Control Techniques. Here we will discuss about the various techniques that analyzes us to control the cost. A budget is used to forecast the financial results and financial position of an entity for a future period. A budget contains an estimated income statement for the future period. Budgeting is the process of preparing detailed projections of future amounts. Budgeting is the highest level of accounting in terms of future, which indicates a definite course of action and not merely reporting. Budget control technique is a means of control in which the actual results are compared with the budgeted results so that the appropriate action may be taken about the deviations between the two. A budget is a means and a budgetary control is the end result. Budgetary control refers to the process of comparing the actual results with the budgeted figures. The various types of budgets are fixed budget, flexible budget, zero-based budgeting, performance budget, cash budget, long-term budgets, etc. Cash budgets is a detailed statement of cash receipts, cash payments, and cash balance for the budgeted period. The cash budget is an important control system for cash. Zero-based budget is a new budget prepared afresh from the start. That is, as the name suggests, from zero or the base. There is no past activity included in the current budget unless there is justification for its inclusion. Standard costing, it aims at measuring the performance, controlling the deviations, inventory valuation, and deciding the selling price of the product. Standard costing is a costing method that is used for comparing the standard costs and the revenues with the actual results in order to arrive at the variance along with its causes to inform the management about the deviations and take corrective measures for its improvement. Variance analysis is a study of deviations of the actual behavior with the forecasted budget or the management accounting. The various types of variances are material variance, labor variance, and overhead variance. Material variance comes into play because of the difference between quantities consumed and quantity initially allocated for the production. Labor variance denotes the actual wage paid to the workers versus the standard wage prevalent for the output specified. Whereas overhead variance may rise due to the difference between standard overhead cost and actual overhead cost. Standard costing is an effective tool for cost control. It indicates the areas where variances arises. This facilitates the management by exception. It also helps in future planning and in formulating policies. By this module, we have summarized the entire concept of cost accounting and in purview of the cost accounting control techniques. I hope the concepts are clear. Thank you.